Hello again, Maverick traders, and welcome out to your weekly currency room where we break down this week's price action and talk about our upcoming week ahead and do a little bit of planning. Let's get into it. We'll be reviewing what happened this week, taking a look at broad market analysis, taking a look at currency baskets, see where the relative strength and weakness is, and talk about our opportunities ahead coming next week. Let's get into this week's price action. Again, market did pull back. So the markets were sort of mixed last week. We saw the bond market and the dollar remain strong, and the equity markets were strong as well. So what happened this week? The market has pulled back. But at the same time, the US dollar and the bond yields continue to stay strong, which is again weighing down on the markets. It's impressive to see that the dollar is up for the 8th consecutive week. If you take a look at DXY, this is up for 8 consecutive weeks. So quite a return, quite a strength that we are seeing in the markets here. Outside of that, looking at cryptos, they look terrible. No buying whatsoever. No point spending a lot of time on it. Let's take a look at the last week's schedule. So we saw the RBA, which again held rates. And the initially price action was to the downside. I think it was more of a dovish hold rather than a hawkish hold. On the other hand, Bank of Canada did hold rates, but it was more like a hawkish hold. This is why we haven't seen Canadian dollar really sell off on that. Plus, we are seeing the USD Canadian dollar positive correlation. So the Canadian dollar is getting helped by what the dollar is doing. So overall, both currencies remain the same. Outside of that, we had the Canadian employment report today, and that was actually better than expected. Unemployment rate dropped down to 5.5, where the employment change was up to 39.9 versus 18.9. So overall, a little better news. Overnight tonight on a Friday, we have the China CPI. So whatever the number comes out, we'll see how the markets react to it as the market open up on a Sunday night. So that's what really happened. Let's take a look at last week's review, taking a look at where are we as far as our scoring goes. So let's just start with the percentage return. You can see it's down. It's negative across the board. S&P down 1.16. World Stock Index is down 1.43. Crypto down. Gold is down almost 1%. And look at oil. Another positive week, 1.97%. Now this marks a 10% gain in just the last 2 weeks. So that's not a good news, especially when it comes to inflation. Let's take a look at where the markets are. We went in this week with a +2 because we were right above the 20 and the 50-day moving average. And look where we are now. We are right in between the 20 and the 50-day moving average. So it is showing us indecision. This is going sideways. We were directional for some part in August and July and August, and now we're just kind of going sideways. But this is, again, we have next couple of weeks very crucial for the markets as we get the US CPI and we get the FOMC. Those could really clear things up as far as the direction goes. Now, let's take a look at what happened in the currency market as far as the percentage change goes. You can see the dollar, another stellar week, 0.82%, and Canadian dollar lagging behind at 0.58%. If you notice that European currencies are not getting a bid. Remember, the entire summer, European currencies did really well. And the growth currencies like Aussie and Kiwi did poorly. Now, they are both doing poorly. So the strong dollar is really weighing down on all the other currencies. So these are the two only rising stars here. And just to remember that whenever these two currencies pull back, we'll probably see the opposite, where we see everything else kind of be up against those two currencies. But for that, we have to kind of wait what happened next week and what happened the following week. The yen also stays weak, so dollar yen is now impressively above that 147 level, which where we were like last year and around those times when the Bank of Japan were doing intervention in the market. So very interesting how far we have come from starting off this year. Looking at the crypto markets, I mean, let's just glance at it and forget about it. It's pretty negative, down to a negative. I'm not really interested in crypto here. Now, let's talk about our outlook. We are now down to 0. So this is where we are getting a decision. I have no idea where the market's going to go. We have the highs over here and the lows over here. So market can really move either way. So you have to really be flexible as far as the market direction goes. Now take a look at the bond market. Bond market is looking really strong. We are above the 20, above the 50. This is a bond market, sort of a basket for the bond yields. You can see that yields is continuing to go higher. Now looking at the crypto, you can see crypto just looks terrible. I mean, this is we have a strong support right here, but upon break of that, I think we'll probably see another big crash in the crypto markets. It looks terrible here. So don't try to go buy any cryptos here. Now let's talk about our upcoming week ahead. We have a very busy week next week, starting with the CPI. That's really the main focus next week. Remember, where we are, the expectation now is going to be rising. Those big year-over-year numbers has fallen off, which means that it will be a lot more harder now to bring the inflation lower unless it's really weakening, unless the numbers are really falling apart. So we're expecting the unemployment, sort of the CPI numbers to go up, 3.6 versus 3.2. They're looking at an increase in core month over month for 0.6 versus 0.2. And we're seeing the CPI to be at month over month core at 0.2. So you can see that's why the dollar is staying strong. That's why the bond yield is staying strong, because the markets are sort of pricing in sort of a bad CPI number, meaning the number is going to go up, which is again bad for economy and is good for the yields and it's good for the dollar. After that, we have the Aussie employment report on Wednesday night. Again, this number, once it comes a week, if there's an uptick in unemployment rate, this will again negatively affect the Australian dollar. So keep an eye on Australian dollar. I like it more further to the downside. Followed by that, we have the ECB rate statement on a Thursday. Again, holding rates. Nobody's expected to raise rates right now. But the big question is the monetary policy statement. Is it going to be in a hawkish hold or it's going to be a dovish hold? And depending on that, it could really change things for the currency. As we go later Thursday, we have the US PPI and retail sales and unemployment claims. All the US data right now is very important. So make sure you are staying sort of in cash when these reports comes out, because either that could really hurt your trade or really propel your trade. If you want to avoid that volatility, it's better to sort of wait out for those events and kind of trade after that. And then on Friday, we have some more US data at about 8:30 a.m. Empire State Manufacturing Index, and we have the consumer sentiment. So all that data right now is moving the markets. So that's really where we need to be active. So going into next week, we think that the market outlook looks uncertain right now, sideways for now, but the US CPI will be in focus. After the CPI is done, we will have the rest of the data next week, which will be important going into the following week when we get the FOMC statement, and we get to see what the central bank's going to do next. For next week, we just have the ECB. Like I said, usually big moves happen on a surprise. If this comes out a little bit more dovish, then we probably see euro kind of weaken off that. So really like the way how next week is setting up. I know this week was not the greatest week. I know I talked to a lot of traders. This week was good for short-term trading, not so good for any longer-term charts. So let's get into some technicals here. Take a look at our scoring system. Take a look at our the velocity score and standard score and see where things are. I mean, cryptos, let's just look at it and forget about it. Everything at a -3 and a 0, meaning trend score is very bearish. Velocity right now, we're just getting a lot of sideways pattern. So we're just consolidating around that key support, which again, eventually it seems like it wants to break lower. You can see it's the same picture across the board. They all sort of consolidating here. Now let's take a look at currency market. Talking about consolidation, take a look at dollar. And this is where you have to keep in mind is the momentum. Momentum is important as you are trading, and momentum is very strong right now for the US dollar. Look at the velocity and look at the trend score, +3 and almost, right now we have a 0 to a +1. I mean, you can see that this is just a high base consolidation in the velocity. But trend score is important right now. It is at a +3. Remember how terrible dollar was early part of this year. So this is where it's the opposite. You want to be on the long side. It doesn't matter if it's been up for 8 weeks in a row right now everything's sort of screaming out a buy. And take a look at how these little pullbacks are getting bought out as well, which means that the gravity is more towards the upside than it's towards the downside. So dollar looks pretty bullish. On the other hand, take a look at the yen. Yen is consolidating, really hasn't gone anywhere. Both the velocity and the trend score is sideways. Not really sure when the breakout will happen in the yen, but when it does, then that's where you want to be playing more directionally. But right now, it's a sideways play. Taking a look at some of the European currencies, one of the things you notice is that the trend score has weakened. Remember, we were sitting at about +2 and a +3 in the Swiss franc around this time. Now, that momentum is weakening. Remember, momentum is the key here. Right now, not so much. Zero. Velocity, zero. So be careful. We don't want to be continuing chasing these currencies when the momentum is not there. Take a look at the euro. The trend score is at a zero. Velocity is almost at a zero. Not the currency price action we want to trade. Taking a look at the pound. Pound is also weakening as well, below the 20, right at the 50. I mean, pound looks a little bit more weaker to me than the Swiss franc or the euro. If you remember, euro pound has done really well since last year, then after making a massive recovery. So pound looks terrible right now as far as the short-term price action goes. Now look at the CAD. Well, guess what CAD's doing? Staying strong. It's right up that resistance level, so which means that if the dollar breaks out, I think the CAD will break out at the same time. So I do like this dollar and the CAD, but again, when they are so positively correlated, then I would rather trade the dollar than the CAD based on the percentage change in the price action. Now, the weakest currency, Aussie and Kiwi, they are kind of going sideways as well. So again, every other currencies are now sitting at a zero. That's not really where we want to be. We want to see both currency moving. We want to be seeing dollar moving higher, and we want to see other currencies moving lower, but that's just not the case, which means that dollars itself is really driving a lot of these movements. So looking at a trend score and velocity score, you notice that everything is kind of wedged right in the middle here. So the only thing that's trending is the CAD and the dollar. The pound is weakening a little bit, -1, but everything else right in the middle. Looking at the velocity score, look at that big thing in the middle here. Everything is kind of wedged in between the middle. Right now, the dollar and the CAD is the one that's showing relative strength, and we have the yen and the pound showing relative weakness. So this is where we're getting a lot of one-way moves. As long as you're long the dollar or the CAD, it seems like those trades are working. But outside of that, if you're trying to play this back and forth, hasn't been as consistent. So let's jump into possible trades ahead for next week. Let's see what really looks good as far as the technicals goes. So I want to start with, let's talk about the how the dollar is doing on a basket as we look at it right now. You can see on a 4-hour chart, it's making a high base, which means that it wants to go higher. So every pullback, you can see all the wicks that we get on the candle has been turning around. And you can see throughout the week last week, there hasn't been there. It's not that the dollar has been up every single day. There has been days where dollar pulls back, but those dollar pullback has been short-lived. As we go into next week, I can expect similarly what happened the week prior, where we got big moves both ways. On bad data, the dollar went down. On the other side, the good data, the dollar went up. So we can expect some of that similar price action, but you can see dollar is really moving things here. Outside of that, I can go around taking with every single currency. It's not, the currency basket's not looking that great. Only the one that really screams out as the direction goes is the pound. So I'm going to spend a little bit of time taking a look at some of the pound crosses. Let's take a look at the pound dollar right now. Now that looks bearish, right? We get sell off, get bear rally, sell off, and right now the price action is weakening. We have the moving average is also weakening, so everything kind of pointing out to the downside. Let's take a look at the daily chart. So the daily chart, you can see that this thing has now fallen sort of below the key level of resistance, which is now the level of support. That was the big level. Now that is sort of breaking here about 124.74. I mean, I think this has a lot more room to fall especially the next level could be around that 118, depending how far the dollar can really goes. Now the euro, in a very similar example, take a look at where euro was breaking out to new highs. It has really consistently weakened since then. So you got to keep in mind is that these moving averages, everything is sort of pointing out to the downside. So you want to be selling the rallies in this kind of price action instead of buying some sort of some sort of rally, since you want to be selling those rallies. So the dollar is really the one. I mean, take a look at the dollar yen. Dollar yen looks like it wants to go higher as well. Beautiful high base setup. If I go on a weekly chart, you can see where we are. We are almost back at this previous high. About 150 was, I think we got up to the 151 before Bank of Japan intervened, and we are getting towards those lines. So what's going to happen is that the Bank of Japan is going to come up, randomly, try to warn about interventions, and the yen's going to rally in the shorter term and it's going to weaken. I mean, that's the exact same story that played out last year. So keep an eye on that sort of price action. Outside of that, you can see that other currencies, if I bring a 4-hour chart, really sideways price action. If I take a look at currencies like, let's say look at the Kiwi CAD going sideways. This is not, especially if you're getting this kind of price action or 4-hour chart, this is a good indication that, hey, be careful. It's not the best price action that you want to be trading. So the game plan is that next week we'll be taking a look at the dollar. We will be taking a look at the bond yields, and we'll be taking a look at the markets. They are very much aligned right now. As you can see, right now the bond yields are, staying strong. Every time it did pull back, it just ended up getting a rally. So overall, that's why the dollar is supported by that sort of price action here. Again, dollar showing definitely more strength here. So unless anything changes in the markets, that is a trade. Long dollar, and again, long the CAD. Remember, CAD is right at the resistance point as well. And at this point, I think this can catch a rally back to this previous high here. So that's the kind of price action that we are seeing, and we have to grudgingly continue on with that. And again, if you're looking for more of what's the next big trade, then wait for that news event. So I think the US data next week will cause a lot of movement. And if you got to take a look back, not this week, but we got to take a look at what happened. Let's go on a 4-hour chart and let's take a look at what happened with a week prior. We had massive moves on good and bad data. So you want to be just taking advantage of that, but realize that those opportunities are short term. You want to be either staying out of those trades or taking advantage of that, but not be committed to it long term. Get in, get out, take advantage of that short term momentum. But outside of that, stick with the daily trend score. That's really where gravity is, and it keeps coming back towards those levels. So that's the game plan. All eyes again on the US data, looking to be trading around news events, and make sure that you keep paying attention to velocity scores and currency in play. Not a whole lot of reversals taking place. So if you are waiting for the reversals or trying to play counter trend, this is not the right time for it. So make sure trading less and trading consistently is the key to win this game. Follow relative strength weakness. Do some planning ahead. Don't be stuck with the technical setups. Look at the momentum, look at relative strength weakness, and make sure that you're in the right place at the right time. Thanks everyone for joining. Enjoy your weekend, and we'll be back at it next week. Cheers, everyone.